All right, traders, welcome to today's midday summary. It is Wednesday the 14th, and this midday summary brought to you by the Tribeca Trade Group. Well, we kind of have the same thing going on here. Is any bounces right now are being faded in the market, just like we saw yesterday. Right around midday, of course, yesterday. We completely just turned around and really again doing that right around the value area for the day. It's pretty ugly because once you kind of look at the hood, I'll look at the technicals of the S&P because I think that's important. But basically the S&P really turned around right on that top of value. And it looks like that I think everybody's eyes are just gravitating to this October low. So only down 60 basis points, but again, these moves from the highs to the lows are pretty magnified on a day-to-day basis, and basically that's what's going on in the Qs and IWM. IWM was up one, which I'll get to in a minute, was up 1% in the beginning of the day, and it's just a complete fade, down 40 basis points. So Qs are getting to that October low. Here's IWM just to kind of see what this did on a day-to-day, but. And right now the trade is, before I start to look at sectors, and I'll give you my view, but here's IWM. Just any type of bounce that's going on right now is just being absolutely being turned away. And there's definitely, so what is this price action, right, that we're seeing? And it's not just S&P. I heard somebody sell, oh, it's an S&P sell program. Yes, it could be an S&P sell program. It's a sell program everywhere. People are just unwinding their long exposure, it appears. I think that's the story right now. So the VIX, which I want to talk about a little bit, because this is just, to me, not showing any panic. You would think for the volatility that's going on that the VIX would probably be around, a lot more drastic, maybe 25. But again, the VIX again is just measuring short-term implied volatility of options. So it's not really telling you what's going on within individual names. It's not going to do that. It's not designed to do that. But I'm surprised. I am surprised that these instruments are not higher. Here's where I see kind of a warning signal that things may not, just be moving down for a couple of days. Look at XBI. So this is my gauge. This is the equal weighted biotech ETF. If you're not familiar with it, but this is a good gauge of risk taking, in my opinion. Now I know that I believe that there's a headline about healthcare pricing. But look at this breakdown. So we are through, if you're thinking that, oh, well, maybe we'll just retest the October lows, take a look at what's going on here in biotech, getting smashed through, down almost 4%, and, barely even hesitating. IBB is almost there. Again, IBB is your larger biotechs. We have been seeing, in terms of option activity, XBI is one area that we've seen repeat put buying in. IBB saw an order today. I think I have that on my recap, and if just to kind of take a look at what's going on in option flow, I was waiting the first 10 minutes today. Of course, S&P futures bid into the open. Europe was also bid, by the way, so I wouldn't just blame it on somebody pumping up futures pre-market, because Europe was pretty well bid too. But what I was waiting for is I did not trade anything in the first 10 minutes, 15 minutes. Actually longer than that, just because I'm kind of waiting to see what is going to happen here, especially on these days where we are seeing a bounce right away. Is there going to be any buyers that come in? And it's not just selling. So right now that continues to be the trade. Anytime we're up, it's the sell the rip mentality, and it's pretty ugly. Puts, you could see, are more active than calls in the single names for the most part. I don't have any of the index flow, but definitely there was a big Q's put buyer in the first 15 minutes as well. That's kind of showing some things as well. I think that's right here. Actually, I do have that order, but I think 20,000 of those traded. IBB should be in here. I'm not sure why it's not in my recap, but there was a big order of December IBB calls. So this, to me, looks really ugly, and the fact that we're not seeing the VIX and really fear hit the market in terms of, it does look like there's a little bit too much complacency. I'm borrowing that from somebody else who mentioned the word complacency, but I think things are also too complacent here. So we can look at some single stocks. Apple is of course the biggest company out there, the biggest company in most indices. It did take out this VPOC. I said I would be a buyer in here. I think I'm going to wait till the end of the day for that. But things are just moving a little bit too fast right now. I just don't want to throw at this point more, throwing bad money after bad money. I don't think that's the right term, but throwing good money after bad money, I guess it's called. But watch these sectors. Really, the sectors give me a heads up of what is going on underneath the hood in terms of risk taking. And it is just, I think just looking at this, it's pretty just nasty across the board for the day. There are some things that are still holding up. If you look at China is starting to outperform the U.S. So, you could look at this in terms of the relationship between the two. Let's see if I have this up from earlier. Nope, I don't have it up from earlier, but I could certainly bring this up. Let's see. Here's FXI SPY. So it's not by leaps and bounds, but it looks like for now, the damage has been done internationally, and it seems like the U.S. is catching up with the rest of the world. Right? I mean, I don't see very many. I think only Brazil is above the 200-day moving average, but this is what FXI versus SPY looks like. And you could see it's been outperforming here a touch. Really, the damage that we're seeing in the last month is more or less with U.S. markets. And then if we look at credit spreads also for the day, just to kind of keep an eye on that. And then I'm gonna look at the yen, which is actually making a little bit of a move this morning, which is also a risk-off gauge. But if we look at, let's see, let's put TLT in the numerator. TLT, so the longer dated bond, and you can see what this is doing. Remember, it reached. So it's not going crazy today. This is not so much credit spreads are not indicating any major issues for the day. Clearly, they're off where they were. They got really tight last Wednesday. That's where the last day of the equity rallied, and since then it's been moving away. But it has not taken out this level from October. So last chart, we'll look at the yen. Which is just up 10. So sorry, not screaming higher, but something to keep an eye on. That's another gauge if kind of risk off is what the yen is doing for the day. All right, so while my computer is crawling to a halt here, yeah, you can see the yen is moving a bit. So again, just up 10 basis points, but something to watch. All right, guys, that's it for today's recap. I hit a couple stops today. I'm just going to really not play games with trying to pick the bottom here. I know sentiment is very washed out at this point, but there are still, some aggressive sellers out there. So I'm just going to sit on a big cash balance and really not kind of pick too much in this market because I think it's just too ugly. If you want to play that trade every day, I think it's there and available. If we're going to be bid up into the morning, into the cash open, you can buy some puts of these indices and scalp because that right now is the trade that's working. All right, guys, enjoy the rest of your day.